Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, and on today's episode, I have with me Broc Buckles. Broc is the co-founder and chief relationship officer of BC Brokerage, a firm dedicated to supporting fee-only advisors with insurance solutions nationwide. BC Brokerage prioritizes straightforward planning before product implementation, which is our topic for today. And works closely with the fee-only financial planning community to offer tailored, practical solutions for clients. So thank you so much for coming on today, Broc.
Yeah, Catherine, it's good to be here. Thanks for having me.
Yeah, I was saying in the pre-show, I've been listening to your podcast for a bit, so it's always a little fun to have somebody on the show where it's like, oh, I'm not just a listener anymore. I'm a participant. But so thanks for coming on.
Yeah, you bet. No, I always think it's a good time, and it's cool when people follow your content. I feel like this with a lot of other people, where it's like I've been listening to their stuff for a while, then I meet them in person. I'm like, I kind of feel like I already know you, which is cool. So
yeah. No, it's funny. I actually had a freak moment earlier today where Michael Kitz's went on my LinkedIn profile, and I was like, oh, it's like Santa Claus visiting your house, like. Because I haven't met him in person.
Yeah.
I haven't gone to
no, he's got a wicked memory. Like I don't we sponsor XYPN in the conference and stuff, but one time, literally I walk up to him, and he's like, Broc, and I'm like, we met one time. I don't know. How do you remember that? Like, he's like, I think his brain is like a steel trap. Like he just remembers everything. Yeah.
Yeah. Or you're really memorable, Broc.
Well,
that's the other option.
I hope it's the latter, but.
So today, we in the pre-show a little bit, we talked about a couple different things we could hit. And I really like where you wanted to start with just talking about the needs-based financial planning first, and then leading into product implementation. I think, in your work with advisors, kind of helping them kind of work through product placements for things, what have been some of the common things you've been seeing people miss in the process, or recommendations you have around, kind of getting the order of operations right in terms of the planning process?
Yeah. So, I'll start out by saying, I think there's a huge problem with people getting an insurance license and then just going out there and thinking that everybody needs one thing, right? And it's usually whatever they're selling and whatever's going to make them the most money. And they're not really doing financial planning. They're doing insurance sales, right? So there's if all you have is a hammer, everything kind of looks like a nail, right? And so they don't really follow hey, let's make a plan. Let's understand what this person's unique individual situation is. And then let's kind of cater an insurance plan around that. It's just sell product, sell product, sell product. And so one of my favorite things about what we do in working exclusively with the fee-only financial planning community is there's already a need for this insurance that's been diagnosed by the time it even gets to BC Brokerage or Broc, right? And there's really intentionality around, the advisor knowing the entire financial plan, what the assets look like, working with a tax professional to understand what their tax situation is, right? And so all of that planning and all of that due diligence goes into play before we ever say, okay, hey, let's implement insurance. And I think that a lot of times people say, the first line of defense is insurance, so let's get that in play first. It's like, if you don't have an idea about the overarching financial plan, how are you going to make a good recommendation, right?
Yeah. No, and that's something where I've seen that over the course, because our firm just works with advisors, and we've had a number of people where they've transitioned from that primarily insurance role into this revelation of, oh, actually, like, there's a lot more at play here. And in order for me to do the insurance piece right, I really need to do the rest of this planning work correctly. When you see people make that, that transition, especially in your work with the fee-only advisors, what are some of the common, hiccups and problems that you encounter when people are not handling the insurance portion anymore and, working with a firm like yours? Like, what are some of the common issues that come up when they're starting to kind of transition into that?
Yeah, so I think that question is kind of a twofold, right? It depends on where they're coming. If they're coming from, a lot of them come from the broker dealer side, and they actually implemented and sold insurance before, right? And so if that's the case, then they have a decent idea over or about what they like, the way that they see insurance, philosophically, what they believe in. With the people that are starting in RIA coming from a different career, or maybe they just came from the investment world, or maybe the extent of their knowledge is just what they learned in the CFP curriculum, one of
Hmm.
the biggest things is just like they want to know more about the insurance world and they want to know more about specific products, right? Like you can know what disability income insurance is or life insurance is without necessarily knowing, what term length somebody wants or the specific way that you should build a DI policy. So I think that
Hmm.
sometimes one of the biggest things is there can just be a learning curve, and there's nothing wrong with that. Everybody's been in a position where they had to learn a little bit more as time went on, and if you're either green and growing or ripe and rotting. So even I'm striving to learn what's going on in the insurance industry all the time and what's new. So I would say that's the big thing. And then I guess the other thing would just be not thinking that there's more than one option, right? So a lot of people kind of get
Hmm.
stuck in their ways and they say, this is what I believe in. No matter what, permanent insurance or whole life is always bad. And it's like, okay, but what about this? And then I always encourage conversation, and most of the time we can meet somewhere in the middle. But those would be a couple of
Hmm.
things that I see.
Okay. Yeah, that's good to know. And in terms of like getting clients through the planning process, and then you determine kind of roughly what their insurance needs are, and then approaching someone like you guys, have you found that some of the advisors where they're coming from like the RIA space and they're having to do a lot of the self education, like what have you found to be good ways for them to get themselves educated to a high enough level where they feel comfortable in that planning scenario? um, like what's some advice that you have for people coming from that direction? Hey there, Catherine here. Thanks for listening to the conversation. Just wanted to explain a little more about what we do. So I'm a CPA here with Dominion. We're a tax firm that works specifically for financial advisors as they're growing and scaling their practices to help them avoid tax waste, make the right calls, and grow practices that they love. So if you're interested in saving more, you can DM me on LinkedIn with the word guide, and I'll send you over our guide for financial advisors to scale tax efficiently. All my top tips to unlock six-figure savings. Thanks, and keep enjoying the show.
Find some good, it depends on how you like to learn. I'm an auditory learner. I like watching
Mhm.
videos. I also love reading, but find somebody that is in the space that you trust and that you can philosophically align with. Um, and then just keep up with their content. I find that to be the best way. I mean, as somebody kind of on the flip side of it that follows a ton of fee only financial planners because that's who we work with all the time, they're always
Mhm.
posting stuff. And I'm like, oh, I didn't know that. Or, tax professionals that I follow, they're like, did you know you could write this off? You could treat certain things as certain trips and stuff as business opportunities or things that you can write off. And it's just like, I'm not thinking about these things. But I always
Yeah.
say, hey, yeah, you could go grab a textbook, you could go read a book. But my favorite way to learn is just to find people that really you like the stuff that they're putting out there. And then little by little, day by day, you can learn more and more about it.
Yeah, that's great. And so what are like some things, say like 2020, that we're recording this end of 24, 24, 25, like what are some things that you see kind of in the current industry environment that are things that might be changing, or things that you think advisors should be aware of different things going on in the current environment?
Yeah, that's a good question. I have to be really careful around this one because you can't be too speculative. But there are some states that are thinking about implementing a long term care tax. I can't talk about which
Mhm.
specific states because they basically said you can't talk about this. It's not for sure. It's not in signed into law yet. But Washington was trying to do it, and they've kind of done a similar thing. So basically withholding certain amounts of money for tax to be able to implement a long-term care plan. And that will definitely affect kind of what a client's financial planning situation looks like. So that would be one of the things that I see on the horizon. Other than that, it's the insurance industry. So I don't see a ton of new products dropping or anything like that. That would be the one thing that I think some advisors, especially the one thing I'll say, I guess, is on the West Coast, have had questions about.
Okay. Yeah, that's good to know. And for advisors that are trying to um, basically, implement having the insurance planning regularly as part of the financial planning, like how often are you recommending people like update policies and update things
Yeah, so
just on a general basis?
So, I mean, we do life, DI annuities, long term care. And then we also do property and casualty insurance, right? So, home, auto,
Mhm.
umbrella, commercial stuff. with that stuff, it's good to shop it out. I'd say like once a year just to make sure the rates are up to date. Everything still looks good. Different things happen. You have a kid that turns 16, you get a car for them. Okay, is this still the best policy? For the other ones, when there's big life events. So for the life insurance, you should be thinking about that when you get married, when you have kids, as you get older, buy larger things, make bigger purchases, just to make sure that coverage is adequate. So I think it's still good to visit most insurance, once a year, at least every couple of years for products that are going to be more long-term. But I think as a general rule of thumb, most of the planners that we work with try to review everything once a year.
Yeah, that's good to know. For when advisors are trying to get more tactical on planning with the insurance, are there common scenarios that you've seen that have been things where maybe an advisor is not as educated on how the different products work, of things that you found really tend to surprise them, in terms of like actual like tactics, or things you've seen like products where maybe there's misconceptions around like what a product does, or the impact that it can have? Are there common ones that you see people surprised by when they're like strategizing with you?
Yeah, good question. It's the big P word, permanent insurance. And
Mm-hmm.
the big thing that we think about there is a lot of advisors have this idea around buy term, invest the rest. And I'll say most of the time, and for the vast majority of situations, term insurance makes sense and it creates a ton of
Mm-hmm.
leverage. You can have it pretty affordably. I mean, for someone that's in their early 30s, late 20s, mid 30s, somewhere between 50 and $100 a month, you can usually have around $1 million of coverage, right? So great for that.
Mm-hmm.
But when it comes to permanent insurance, a lot of people just write it off as, there's never a situation that you need it. And what I found is actually when you bring up a couple scenarios, people are like, yeah, okay, it actually makes sense. So permanent insurance, estate planning, super high net worth people, offset estate tax. You cannot rely on term to do that, right? It just doesn't make sense.
Mm-hmm.
We can't time our own deaths. I'm not sure even if we could, we would want to know. So permanent insurance makes a lot of sense in that regard. Special needs
Mm-hmm.
planning, permanent insurance can make a lot of sense if there's someone in the family that has special needs where, when the caregivers or caretakers pass away, there needs to be a tax-free injection of cash to help take care of that individual and make sure that they can have all the things they need in the untimely death of the parents or the caretakers. And then long-term care planning, a lot of times that's actually based on a permanent life insurance chassis now too. So I would say, you don't have to love permanent insurance, but don't completely write it off as something that never makes sense.
Yeah, no, and those are some really, really good scenarios. Have you seen places where permanent insurance has been getting deployed where it shouldn't be? Like, what are common mistakes that you've
Yeah.
been seeing on
Yeah.
that?
Yeah. So a lot
Yeah.
of people will there's a lot, stay away from TikTok for your financial advice for the most part.
Also for tax advice, stay away
Also,
from TikTok.
yeah. Did you know you could write off everything? Well, you can't. So I would say one of the things is the concept of infinite banking, right? So a lot of people preach infinite
Mhm.
banking, which is like buying a whole life insurance policy, putting a bunch of money into it, automatically taking a loan from the cash value, paying yourself back, da 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 da. And everybody always wants to talk about how, Ray Kroc, the person that made McDonald's really popular, and the Rockefellers and all these people utilize this strategy. But it's funny how everybody always wants to talk about how these concepts apply to like America's most wealthy people. And then they never want to talk about how when you're just selling it to the average American or people that, are just trying to earn an honest living, it's oftentimes overcomplicated, doesn't make any sense at all. So that's one
Yeah.
problem. The other thing would be a debt elimination platform, also using permanent insurance or sometimes whole life insurance, where instead of systematically finding a way to just make a good budget and pay off debt, it's the same kind of concept, right? So buy a permanent life insurance policy, pay a bunch of money into this every month, and then borrow it and start paying off your debt systematically. So effectively what you're doing is telling somebody that already probably has a spending problem to go put another $1,000 a month into something that they don't need, that ultimately they're probably going to cancel. So if something is being preached as like the all-in-one Swiss Army knife, whatever, it's probably a pretty good indication that you're working with somebody that's trying to make some money off of you.
Yeah, no, that's a really good point. And something that, I see constantly in conversations with advisors and throughout doing this podcast of you really cannot ignore the behavioral impacts of things too, of just trying to sign somebody up for a product where it's like, yeah, mathematically this might make sense, but behaviorally,
Exactly.
they're going to go buy the car that they should, they're going to buy the toy or whatever it is. So really knowing that behavioral side too before you implement the products. What are there any other, I guess maybe before we kind of wrap things up just on this short interlude conversation, are there any other big mistakes that you've been seeing the fee only advisors making when it comes to approaching insurance, or things that you commonly encounter of learning curves that they hit?
That's a good question. I'm trying to think. I mean, honestly, I would say most of them know their stuff pretty well. I mean, I feel like if you're trying to get into fee only financial planning, I feel like you've already done a fair amount of research as to why you're trying to get into fee only financial planning and what other alternatives are out there. And the barrier to entry to get into fee only financial planning before things like XYPN, created by Michael Kitces and Alan Moore, it was a lot harder. But no,
Yeah.
I mean, I think we covered it. Really, it's those big things around don't get too stuck on this is always the answer. And then just that there can be a learning curve if you've never been insurance licensed and you're trying to learn more about it. But in terms of mistakes outside of that, like you said, there's not necessarily right or wrong when it comes to financial planning, except for things that are just absolutely ridiculous. It's more like find a plan, know that plan works, and stick with it.
Yeah, that's great. That's great. So for people who are looking to connect with you, Broc, what is the best place for them to get in touch, learn more about what you guys do, and work on their self-education journey?
Yeah, for sure. So feel free to follow me on LinkedIn. Just Broc Buckles, BROC, is the first name. No K is my dad's decision, not mine. So if you can't find me, and then also on Twitter, I think it's Broc_Buckles. And then feel free to check out our website, bc-brokerage.com. And if you're a fee only planner looking for a place to be able to help your clients with insurance, check us out.
Nice. Great. Well, thanks for joining. For those of you listening, please leave a review or comment, or I'd always love to hear feedback on what you thought and ideas for future episodes and what you took away from it. So thanks again for joining me, Broc, and thanks for listening to another episode of the Financial Advisors Want to Know podcast.
Thanks, Catherine.